Hi again, everyone. Hope you're all doing really well. So SOFI stock is one of the companies I've become a big fan of this year. While I thought I was doing well getting in just prior to the decent rally that was experienced due to the successful finalising of their bank charter, SOFI stock has since been sagging in line with the broader markets, particularly since the whole Russia-Ukraine situation escalated. The stock fell to below the $8 mark per share as recently as Monday, however, mounted a bit of a comeback on Tuesday in line with the rest of the market, where it gained 27 cents per share or 3.4% to finish the regular session back above the $8 mark at $8.20, which I still think is an absolute bargain if you're trying to get into the stock. So what drove the bounce in SOFI's stock on Tuesday? Well, there has been a raft of positive news for the markets over the last trading day in general, including signs that interest rates may not rise as fast as had been expected as the Fed prepares for their two-day March meeting. Also, there were signs that inflation is curbing with US producer prices being unchanged for the first time in about a year, and there was a bit of a drop in the crude oil price, all of which saw a decent bounce in all three key US indices to the tune of about 2 to 3%, and most of the wider market, with the Nasdaq being the strongest performer, capturing 2.92% gain on the day. SOFI, being in the fintech space, appropriately rode up with this general movement. So at these current prices, I think SOFI is a great buying opportunity for the long term, and here are 5 reasons why. Firstly, interest rates. Now that SOFI has achieved their bank charter, they are officially allowed to autonomously hold bank deposits and fund their own loans. This is an important development as it means that they can set their own interest rates and no longer need to share profits with partner banks. And from what I've seen from other fintechs here in Australia and abroad, they are generally able to be more competitive than traditional banks when it comes to this type of business due to the lower overheads that they have. So this bank charter and the impact it will have on SOFI's bottom line going forward puts it at a huge advantage over many of its fintech rivals, as well as the traditional banks that they will be competing with. This leads me to the second point I would like to make about SOFI. That is that SOFI is an ambitious brand. It has been reported that SOFI want to be the Amazon of the fintech space, basically being able to cater for as many financial services as possible and achieve the widespread acceptance of the broader consumer market. SOFI have demonstrated their aspirations to provide a whole suite of services and solutions to both individuals and increasingly to corporate clients. This has been further developed through their recent acquisition of Technici and earlier Galileo. The combination of these two platforms allow SOFI the ability to build out front and back digital banking services, and that those services can have a customizable interface for users based on their servicing needs. Much of the excitement around SOFI is pegged to the ambitions they have expressed and their decent track record so far on delivering. As a consequence, the company, while still relatively small in the general banking space, has continued to demonstrate strong growth with 55% in revenue and an amazing growth of 87% in new customers in the past financial year. These numbers are very impressive, and the company has forecast for similar growth for the 2022 financial year, which may even be exceeded now that they have received their bank charter and the fact that interest rates are expected to rise. It will also be interesting to see if there is a bit of a bump in users of SOFI this year following the huge exposure the brand gained through the Super Bowl being hosted and won by the home team at SoFi Stadium, the Los Angeles Rams. The fourth reason, and connected back to growth, is the underlying value of the stock. Now, priced at $8.20 per share, SOFI stock currently has a net asset value of $3.78 per share, which is about 46% of the share price is held in net assets, which gives it a net asset multiple of just over 2. Given the growth prospects ahead for the company, this seems like a real discount. While the ratio is in line with many other traditional banks when compared to other fintech companies such as Block, aka Square, one Block share has an underlying net asset value of $5.37, yet currently trades at $103.45 per share, which has been after a long period of taking a severe market beatdown. Block shares have an underlying net asset value worth about 5% of the current share ratio, as opposed to SOFI, which is 46%. And if you're looking at tangible book value multiple, Block has one of 20 versus SOFI's 2. So you would have to think that SOFI is going to fall somewhere between the valuation of a bank and a pure play fintech share. So at the current level, it just seems like a really great value buy and hold stock for the long term. And this brings me to the final reason why SOFI seems to be currently a great buying opportunity. Basically, all signs are pointing up, or at least according to the analysts. There is a general consensus for the stock with 12-month price targets ranging from $12 to $35 per share, with a median of $24. Achieving any of these targets would represent anywhere from a 50% through to 440% return based on the current share price. When it comes to stocks, it is never predictable what is going to happen, but at least for SOFI stock, there is a lot to look forward to. While the macro environment looks set to weigh in on securities particularly negatively for the time being, you'd have to ask yourself, does SOFI, given all that it has ahead of it, have the space to drop much further in this market? Not that this is investing advice, but I'm hoping to add to my current holding through this period, through some accrual trading and potentially diverting some extra funds in my account to the stock. Anyway, how are you all feeling about SOFI stock at the moment? Has its recent record low price of $7.74 set on Monday been the lowest point we will see the stock fall to, or do you see a further slide on the cards given what's going on in the macro environment? What are you all planning on doing with SOFI stock now and into the future? I'd love to hear from you all in the comments. Also, if there's another stock you would like me to consider taking a look at, drop a ticker symbol in the comments and I will see what I can do. Till next time, everyone, may the markets trade in your favor. Cheers.